Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in past videos, and I will do a quick review on each of them. In the later section of this video, I will also begin covering these new names. I will also be ceasing coverage on several names as well. Do check them out towards the end of this video. I've put in timestamps, so please use them to skip to the names that interest you. In the video on the 11th of October, I said that the dollar index remains bullish due to completion of a falling wedge, denoted by the green trend lines. I also highlighted that it could be forming a double bottom, denoted by the red curved lines, and the risk of completing this new bullish pattern has increased. Let me just show you the Ichimoku cloud and the Bollinger Bands. After closing and holding above the Ichimoku cloud, further upside is expected after bouncing off the 20-day moving average twice, if I might add. Just so that you can see the patterns clearly, I will remove these two technical indicators. Now, closing above 100.25 is required to complete this double bottom, and upon completion, the textbook target is at 104.13. This surpasses the textbook target of the falling wedge at 102.52. I have not updated on dollar Swiss since the 20th of September. In that video, I stayed bullish on dollar Swiss due to completion of a falling wedge and stated that closing above the 20-day moving average will be a good start to the bullish resumption phase, better still above the cloud. Dollar Swiss attempted both over here in early October and failed, but has recently found success. Dollar Swiss is now holding above the cloud, and this has exposed a move higher. The textbook target of this falling wedge is at 0.8533, with potential rejections around 0.8347 as well as 0.8476. I am willing to give up on this bullish view if dollar Swiss falls below 0.78. In the video on the 11th of October, I said that Singapore dollar against the Malaysian ringgit, Sing ringgit, remains biased to the downside. This continues to be the case as price action converged towards the lower Bollinger this week and the last as well. It continues to form a head and shoulders top, which requires a close below 3.2053 on a weekly basis to complete. I first highlighted the potential formation of a head and shoulders top in sterling dollar on the 20th of September. Sterling dollar is nearing completion of this bearish pattern. If sometime next week or future weeks, sterling dollar closes below the neckline at 1.3141, then this bearish pattern is complete. The textbook target is at 1.25, but note that there is a support at 1.2707 that can bounce sterling dollar higher when tested. One cross that saw pattern completion this week is the dollar Sing, dollar against the Singapore dollar. I first highlighted the potential formation of a double bottom on the 11th of October, and on the 30th of October, dollar Sing closed above 1.3, completing this bullish pattern that has a textbook target at 1.3290. Dollar CNH is similar to the DXY, first forming one bullish pattern and maybe forming a second one. As highlighted on the 4th of October, it is bullish due to completion of a falling wedge denoted by the green trend lines and has a textbook target at 7.2140. Since then, it went into the correction phase, quite a deep one I must add, but did not invalidate the falling wedge since it neither closed below the support trend line nor the last low. With this week's rebound, I suspect that it may be forming a double bottom just like what I have shown you earlier in DXY. Of course, further upside is required to be sure, so there is no need to expect too much at this juncture. Let's just wait and see what happens. There are new developments in dollar real since the last video on the 20th of September, somewhere around here. in which I said that the next move is likely to be higher first as a correction and probably could get rejected by 5.4063 or by the cloud resistance to resume the downside. Dollar Brazilian real did break above the cloud but failed to hold above it and got rejected as expected, suggesting a lack of upside strength. Now, recent price action developments suggest the trend may be changing, but first let me address this head and shoulders top bearish pattern that was completed over here in June. This bearish pattern has a textbook target very deep at 4.9543. Dollar real over here fell to a low of around 5.2709, meeting only 56% of the textbook target and has since rebounded. The reason why I said that the trend may be changing is that price action over here formed a downside exhaustion candlestick on the 29th of October, followed by a close and holding within the Ichimoku cloud. This has raised the risk, in my view, of forming a head and shoulders bottom, a bullish pattern. Of course, further upside from here is required for me to be convinced that that dollar real indeed has bullish intention. Closing above the cloud would improve dollar real's upside bias. Closing above the neckline around 5.54 will complete this bullish pattern, and I will then deem the previous bearish pattern, the head and shoulders top, to be invalid. I'm starting coverage on Meta Platforms, the parent company of Facebook, by turning technically bearish. I was already suspecting the formation of a head and shoulders top and was preparing to cover this in this video anyway, just that I did not expect it to complete this bearish pattern via a sharp gap down. My expectation is for this gap to be eventually filled, either fully or partially. That means Meta risks rising to 742.51 first before resuming the downside. The textbook target of this bearish pattern is at 587.63. I'm starting coverage on Danaher by being technically bullish on it. I believe that it has completed a head and shoulders bottom and the textbook target is at 261.23. I doubt that the recent decline is the correction phase. There was a gap up over here on the 21st of October, and I believe this decline is the attempt to fill this gap before upside resumes. So there is still a bit more room to fall for Danaher to around 211.56 first. As long as Danaher holds above the Ichimoku cloud, I will have to stay bullish on it. Falling below the cloud, of course, I will have to start doubting its bullish intent. Moving on to a Hong Kong stock, Meituan, I think there is bullish potential in this name. Firstly, there was a sharp gap down on the 28th of August. My view on gaps is that they are usually, though not always, partially or fully filled. So there is a risk that Meituan rises to 116.1 to fill this gap. Also, Meituan appears to be forming a falling wedge, a bullish pattern. Closing above the resistance trend line will complete this bullish pattern that suggests a move of around 14.5 Hong Kong dollars. But if Meituan falls below the support trend line, then this bullish pattern is lost. Covering only one new FX cross in this video, dollar Mexican peso may be forming a cup and handle bottom which requires a close above 18.62 to complete. Note that the downside bias has eased after closing within the Ichimoku cloud, and closing above the Ichimoku cloud will significantly increase the risk of bullish pattern completion. Moving on to a list of names in which I will cease coverage, starting with the important S&P 500. I said that the S&P 500 completed a bearish pattern over here that has a textbook target at 6,479.36. This was incorrect as price action rallied after pattern completion and closed above the resistance trend line, thereby invalidating it. I expect the S&P 500 to correct lower in upcoming sessions due to two gap ups over here on the 29th 24th of October and 27th of October, as well as overextension above the upper Bollinger. I will cease coverage on Nvidia. I propose that Nvidia may be forming a rising wedge in the video on the 18th of October. Since then, Nvidia has invalidated this bearish pattern by breaking above the resistance trendline. Just to add, I expect the next move for Nvidia to be lower to fill the gap up on the 29th of October, as well as to correct the overextension above the upper Bollinger. Next, I will cease coverage on Microsoft, which I proposed on the 18th of October as a potential cup and handle top. This bearish pattern was invalidated on the 27th of October when price action rose above 531.03. And we can see that Microsoft gapped up on the 27th of October as well as 28th of October and then has since declined to fill up these two gaps as well as to correct the overextension above the upper Bollinger. Now, I suspect that Microsoft may be forming a double top, but of course this is a story for another video. I will also cease coverage on Toyota Motor. I identified this name as forming a head and shoulders top, but price action has since rallied, nearing invalidation of this bearish pattern. Finally, I will no longer be covering Qualcomm going forward. I turned bearish on this name due to completion of a head and shoulders top over here, but this bearish pattern was eventually invalidated this week after the sharp advance. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.